Hello everyone, Justin Simmons, DKC Realty Group. Thank you so much for joining us today, and I hope you are having an excellent, empowering day. Now, we're going to cover step 12 in the How to Sell a Home series. It's time for the appraisal. Okay, just to give you a quick tidbit about what's happening with the buyer, we've taken the executed contract, sent it to their bank. Their bank has reached out to them for a loan application. They need it completed and signed and submitted from the buyer. The loan application is an in-depth review of their employment, income, assets, debt, that good stuff. Plus, they're going to be looking at the features of your home, talking about like taxes, the property type, to make sure that the buyer at the end of the day is going to qualify for the mortgage they're looking to use. Okay? Now, when they did that, they also ordered an appraisal. So the appraiser is coming to your house to check if there's any major health or safety issues present, and to check the market value of your home. Okay. Now, you've been with us from the beginning. You know the things I've been stressing. So just like when we took our photos, did our showings, had our open house, had the inspection, for the appraisal, it is key that the home is in as great condition as possible. Everything is functional, turn on, ease of movement, we decluttered. We want the appraiser to see the value immediately when they walk in. Okay, so what are they actually going to be doing when they come? They're going to be walking the exterior of the property, taking measurements, checking to see if there's any health or safety issues. They're going to be going inside the home, check the layout, check to see if there's any health or safety issues. They might even be sketching things down just to have a sense of how everything is situated in your house. They'll note features, they'll note the condition. They're taking all that information. What they're going to be doing with it is basically creating a profile of your home based off the factors they have to use to assess the value of homes. And they're going to be comparing your house to its comparables. Now, comparables or comps, or a term we like to use in the industry, are homes that help determine the value of yours. What's going to qualify as a comparable? It's going to be a house that's sold within 6 months of the time of the appraisal. It's the same property type and sold within half a mile. Those are the basic guidelines. Now, appraiser might have to get fancy if they can't find enough homes or there's some other situation going on. But typically, it's last 6 months, within half a mile, and same property type, right? So if you're selling a single family, they're only going to be looking at other single families. They're not looking at two families or condos. They want apples to apples as much as possible. Those three comparables that they're going to be using, because they're really keying in on three, is going to give them a baseline of value. Now, they will adjust the value of your home up or down based off the features and conditions present in your home compared to the comparables that are already sold. We're in good shape when we sell in the sweet spot, about right at our market value, a little bit below, because now when the appraiser comes, we don't have to worry as much. Sometimes a buyer will agree to pay more for your house in the beginning, betting on a lower appraisal coming, and then it's a tug of war back and forth about what exactly is going to happen. As long as the appraiser says your home is worth what the buyer is agreeing to pay for it or more, no problems. We're in good shape. If the appraiser says the market value of your home is worth less than what the buyer agreed to pay for it, now we're back in our negotiation mode. Let me give you an example. Let's say you're selling your home for $700,000. The appraiser says it's worth $670,000. There's a $30,000 gap that the bank will not fund. So the bank will fund up to the $670,000. That $30,000, the bank is going to say, hey, it's between the buyer and the seller to work it out. So is the buyer going to pay $30,000 extra in cash on top of their down payment in closing to close the gap? Will you reduce the price, $30,000, to come down to where the appraised value is? Or you meet somewhere in the middle? These are the types of issues that come up when we have a low appraisal, and we have to negotiate from there, okay? But if we sold in the sweet spot, right? We had a competitive process in the beginning, Maybe we even had a buyer waive the appraisal contingency and agree to pay any difference that may come up later on. We're in good shape. I keep stressing that sweet spot, but it helps us every step of the way throughout the process to make your sale go as smoothly as possible. Okay? So typical appraisal, hopefully things go very quickly, 15, 20 minutes. You may be there, maybe you're not there, and it's your real estate professional providing access. However you want to work that out. So the appraisal report typically comes back within a week or two. It goes to the buyer, they're the ones who paid for it, and their side will communicate to our side regarding the appraisal value. Okay? As long as we're good to go on the appraisal value and there was no health or safety issues found, we're moving forward in the transaction. So if you like this video, I got more. They're popping up. Check them out. Subscribe to the channel. 3 educational real estate videos every week. Hashtag is jsbxhomes. We're all over the socials. And next week, episode 13 in the How to Sell a Home series. Thank you all so much. Hope you have a great day, and I'll talk to you soon. Bye.